Today on Forbes, Starlink's numbers could bring SpaceX's valuation crashing down. Settling other planets isn't going to be cheap. That's why Elon Musk, after setting out to develop lower-cost rockets at SpaceX, decided to make money with them by launching a satellite network called Starlink to sell broadband internet access to ruralites. Writing on his social network X last year, he said, quote, "Starlink is how we are paying for humanity to get to Mars." Starlink's progress has been stunning. In March, less than 5 years after starting service, it reached 5 million customers, more than doubling the market of the previous satellite communications incumbents, Viasat and Hughes, at their height. Sunny expectations for Starlink are one of the main reasons investors have been eager to pump money into SpaceX. Its valuation hit $350 billion in December in a sale of insider shares, making it the most valuable private company in the world. That valuation has largely held steady on secondary markets this year, even as shares in Musk's electric car maker Tesla have plummeted 55% from a record high reached in mid-December amid faltering sales and public fury over Musk's role in the Trump administration and embrace of right-wing nationalists in Europe. On Wednesday, shares of Tesla surged 22% after President Trump suddenly announced a pause in most reciprocal tariffs for 90 days. By market close Thursday, shares had dropped back down 7% for the day. But even with a relatively steady valuation amid Tesla's troubles, some fear SpaceX, too, could face a reckoning, with the upside for Starlink not as high as investors seem to be betting. As with Tesla, it's partly a question of how much they're buying into Musk's grand vision and their willingness to overlook financials. Independent telecom consultant Tim Farrar told Forbes, quote, "I don't think that Starlink alone as it exists today and the reasonable view of its future growth is going to support that sort of valuation." Rockets may be exciting, but the market for launching cargo into space isn't huge, between $10 billion and $15 billion a year. Profits aren't great either. Telecom, however, is another story. With Starlink, SpaceX is angling for a share of a market worth over $1 trillion a year. SpaceX has rapidly built a constellation of 7,100 satellites in low Earth orbit, 62% of all active spacecraft circling the planet, according to Harvard space watcher Jonathan McDowell. Starlink is making money from them by offering internet access to airplanes and ships, and peddling a military version called Starshield, enhanced with secure communications and surveillance capabilities. It's also competing with companies like AST Space Mobile and Globalstar to enable emergency cell phone service in remote dead zones. But its biggest opportunity by far is in high-speed residential internet access, a market that the research firm Quilty Space expects to account for 63% of Starlink revenue this year. SpaceX doesn't share financials, but Chris Quilty, founder of Quilty Space, estimates Starlink is on track to grow revenue 58% in 2025 to $12.3 billion, making it one of the fastest businesses to hit the 11-figure mark. Morgan Stanley analysts, led by longtime Tesla bull Adam Jonas, believe much greater heights are ahead. They're projecting that in 2030, SpaceX will pile up $65 billion in revenue and $16 billion in net income, with Starlink accounting for 72% and 82% respectively. They've also argued that SpaceX's growth prospects through 2026 could justify a valuation as much as double the current $350 billion, when looking at the multiples investors have given large, fast-growing public companies like Adobe and Intuitive Surgical. But those bullish vibes ignore some of the hard ceilings Starlink faces. Its satellites simply aren't capable of serving many internet customers in densely populated areas. And in rural regions, the population that can afford to pay its high prices is limited. Starlink has yet to launch in many countries in Africa and Asia, but the wealth disparities there are worse than in most of the markets it's currently serving. And in richer countries where it's able to charge higher prices, there may not be much room left to expand. Meanwhile, competing services are on the launch pad, including from rival billionaire Jeff Bezos' Amazon. For full coverage, check out Jeremy Bogaski's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.